Oz Minerals shareholders have voted overwhelmingly to accept a $1.7 billion asset sale to China's Minmetals. But investors have slammed Oz Minerals directors over their handling of the company's affairs. Oz Minerals says it's a victim of the credit crunch and the plunge in commodity prices. But shareholders are far from convinced. Neil Woolridge reports.
Oz Minerals may have just secured a company-saving deal, but after today's annual general meeting, shareholders were in an unforgiving mood.
The mood of the shareholders was quite angry, and justifiably so.
Overnight, China's Minmetals increased by 15% its offer to buy most of Oz Minerals' assets. Today, 92% of Oz Minerals shares were cast in favour of the $1.7 billion deal.
Shareholders feel as if there's a gun at their head. The chairman said that if the shareholders today did not approve of the resolution, that the outcome would probably be that the company would go into receivership.
What I can't understand is why they didn't come to the shareholders and ask them for more equity, because I can't believe that in this environment we wouldn't have stumped up a few more dollars, got out of this problem.
A proposal from Macquarie Group to recapitalise Oz Minerals fell through last night. Another recapitalisation plan was rejected by Oz Minerals' board on the grounds it was inferior to the Minmetals deal. Chairman Barry Cusack says the increased offer from Minmetals reflects the improvement in commodity and equity markets.
When they came and rescued us, they made what was, I thought, a very generous offer at the time, and thank gosh they did. But the market has moved up a bit, and we'd been, of course, discussing that and what our perceptions had changed.
Oz Minerals will retain the prominent Hill gold and copper mine in South Australia, along with some smaller projects. Barry Cusack says the deal will leave the company debt-free, holding around $500 million in cash. It's a far cry from late last year when Oz Minerals' banking syndicate refused to roll over the company's debt facilities, threatening its survival. Chief Executive Andrew Michelmore says the company was vulnerable because of its exposure to base metals.
We got hit faster than the iron ore, coal, minerals companies who have long-term contracts, set prices. We take instantaneous prices off the LME. So base metals get hit faster and earlier. Also, the banking facilities, the banks saying they wanted all their money back.
And he warns that other mining companies may soon face a similar predicament as they seek to roll over their funding arrangements. While the Minmetals transaction received overwhelming support, Oz Minerals faced a backlash on executive pay. Only 1/3 of shares were cast in favour of the non-binding poll on Oz Minerals' remuneration report. And long-standing director Michael Eager received just 56% of the vote, well below the 90% or more that incumbent directors typically attract. The key concern for shareholders has been the dramatic fall in the value of their investments. Oz Minerals' share price has plunged by more than half since the company was formed through the merger of Zinifex and Oxiana last July. And investors remain angry about an $8 million payout handed to Oxiana's former CEO, Owen Hegarty.
Of course, if you look back at the downturn that people have suffered since September, it looks a big number. Of course it does. At the time, it was what we had to do to move forward.
Minmetals says the transaction is a defining moment in its history, and the majority of Oz Minerals employees will join the new owners. Andrew Michelmore will become Minmetals' Australian CEO on completion of the transaction, which is expected to occur in the next week. He'll retain a shareholding in Oz Minerals and suggests other investors do the same.
Stick with Oz Minerals. It has a great future. You only need to have a look at those graphs that Barry put up to show that we've tracked down with everyone else, and as the market tracks up, Oz Minerals will track up, and as Barry has said, it's a fantastic base, it's going to be clear of debt, it's got huge prospectivity.
But after the experience of the past 6 months, the board will have a much harder time selling such an upbeat story to current and prospective shareholders.